Okay guys, in this video we're going to do something different. We're going to talk about the different styles of trading and the different types of trading that you can do. And there's essentially four different ways that you can trade these markets, and each of them fits a certain type of person, right? A certain type of person. And the four different types are swing trading, scalping, day trading, and someone most people forget this, short-term trading, which is on the hourly chart. And we're going to discuss each and every one of them, and we're going to see which one's best for you. Now, I've had experience with all of these because no one really taught me this in the beginning. And the first one is scalping. Now, scalping is what most people would say is trading. Those who don't know about trading would say, oh, trading is just scalping. Now, scalping is very fast, very quick, in and out, quick trading. And to be honest, I hated this approach. Like, I hated this approach because for me, I like to take my time, I like to do lots of analysis. And yeah, I don't like making decisions under pressure, and I always struggled with this. But unfortunately, I spent maybe about half a year maybe, just trading the 1 minute chart, and it was not good. Put it bluntly, it was not good. I kept losing, and I was the thing is with me, I was very hesitant to get into the trade because it would move so fast. Because you have to make such quick decisions. And another thing that annoyed me is I like to take a set it and forget it approach. So I like to set up a limit order like this, right? So you know your limit order, you set it up, you know where you're gonna enter, you know what your stop loss is, you know what your take profit is. I'll tell you what, on the 1 minute chart, you cannot do that. You cannot do that because it moves way too fast, way too fast. So you've got to do essentially a market order, which is where you buy, sell, quick, in and out, in and out, in and out. And it requires very fast decision making. So, you know, it depends on your personality. If you like to make fast decisions under pressure, if you're really good at that, you know, you like to be in and out, you don't want to hold for a long time, you just want to quickly get in, quickly get out. Scalping might be for you. What I would say is that scalping is on the 1 minute chart, and I would personally say the 5 minute chart. For the 1 minute chart, do not trade forex. That's just my opinion because forex has something called spread. So if you go on to, let's say, Oanda, the difference between the buy price and the sell price is about pip and a half, really. Which means, let's say you wanted to buy price, right? You wanted to get into this move on the 1 minute chart, and let's say you were just targeting this high, right? For simplicity's sake, and you would buy thinking that, oh, I'm gonna get filled around here. Well, it would add 1 pip on, so your actual entry price would be all the way up here. And if your stop loss was, let's say, down here, you're now gonna have to adjust for this extra bit that you've got into. So for forex, it's not good because most forex brokers have a wide spread. So personally, I would never trade the 1 minute chart for forex unless you want to aim for a one-to-one. But if you are a scalper, you want to trade futures because futures are really good, really good for the 1 minute chart. Um, yeah, it moves quite nice, the 1 minute chart for indices, because the good thing about indices is that between 9:30 a.m. here, New York time, all the way till about 4 p.m. is the indices open, so price has to move between that time. And yeah, if you want to be a scalper, you want to be in and out, you want to be on the 1 minute chart, you want a quick fire entries, indices are for you, right? You want to trade futures because futures will be very good for you, and futures don't have a spread like forex does, right? They don't have a spread. They have a bid and ask price, but it's very tiny, so you can do this reliably. So let's say if you wanted to enter on, let's say, this fair value gap here, and there is a tiny one there, you would actually get your order filled, right? Whereas with spread, you get it filled at an awful price. So if you are a scalper, you are going to want to be on the 1 minute chart. But some of the cons of scalping is that you're going to have to trade at key times a day. Yeah, key times a day, absolutely key times a day, because you can't trade the 1 minute chart at any time, right? You have to trade at a certain time of day. So for indices, you're gonna have to trade really between 10 to 11 a.m. Eastern. That's like a golden time for indices, because the first 30 minutes are usually a fake move, right? Usually a fake move. Um, yeah, you know, it's the thing is with scalping, I would say the more experienced you are, the lower the time frame you should go, whereas the higher the time frames, the more easier. That's just from my personal experience. But if you want to trade the 1 minute chart and be a scalper, I would recommend futures and indices. If you want to be on the 5 minute chart, and this is where a lot of people get confused between day trading and scalping, because it is a bit blurry, let's get onto the 5 minute chart. Now, for me personally, I would say the 5 minute chart is more of a scalping sort of time frame. Whereas the 15-minute chart is more for day trading. Day trading, you want to hold for a few hours, whereas with scalping, you probably want to hold for an hour, or you want to trade the session. So right now, we've just finished London session. So you probably would have wanted to trade the whole London session itself with the 5-minute charts. So with the 5-minute chart, it's a lot more compared to the 1-minute chart. It's a lot slower, but it will move fast. It will move a lot faster than you think. But you can set up limit orders and stuff. Let's say you wanted to enter on, let's say this fair value gap here, right? You could set your limit order up as price is coming up because it's the 5-minute chart. Whereas if it's the 1-minute chart, it'd be very, very fast. So 5-minute chart is good for a lot of traders. A lot of traders do like the 5-minute chart. They don't want to hold overnight, and they also don't want to hold for like hours at a time. They want to be done for the session. So for a lot of traders, the 5-minute chart is quite good. Personally, if I wanted to trade like intraday, I would be a day trade on the 15-minute chart, but the 5-minute chart is very good. And if you want to be a forex trader, I would not go below the 5-minute chart. I would not go below the 5-minute chart because the 5-minute chart for forex is the least you want to go because spread, anything below 5-minute gets more unpredictable and you start to have to worry about spread. And if you just get onto the 1-minute chart now on GBP USD, it's very thin price action, very thin. That means there's not much liquidity there because each candlestick isn't as significant. Okay, so for the next style of trading, we have day trading, which is what everyone calls trading, day trading. This is the bread and butter that most people do like. This is very good if you want to trade intraday. If you want to be done by the same day, you want to buy and sell on the same day, I would recommend this style of trading. And this is on the 15-minute chart, not the 5-minute and not the 1-minute chart. And personally, from my experience, I would say it's hard to day trade indices, right? So let's just get indices up. Because if I just get NASDAQ up, right, for indices, what you'll find is that, let's say at the indices open 9:30 a.m., is that price will just drop massively. It would drop massively, and there's not much time for a retracement. If I go on extended trading hours, which means 24/7 trading, again, you don't really get any retracements like you would get in forex. If this was forex, you would get a retracement into this fair value gap approximately, and then price would shoot right off. But with indices, because you've got that 9:30 a.m. open, like here, it's very difficult to trade. There's really nothing in here to trade on the 15-minute chart, that is. So for me personally, I would say avoid indices for day trading. You should be a scalper for indices. But anyway, let's talk about day trading because I think this is probably one of the best approaches that a lot of traders should take. Between this and swing trading, it's neck and neck. I know a lot of people don't want to hold for like a few days. If you don't want to hold for a few days and you want to be an intraday trader, I would highly, highly recommend day trading because this is very simple, or at least the simplest trader can get. And for day trading, you want to use the 15-minute chart, right? Don't go below the 15-minute chart. You will hold for probably a few hours, although who knows, sometimes your take profit gets hit in like 30 minutes. But you do want to use the 15-minute chart because it just makes it all so clean. And right now, I'm just messing around because I'm a swing trader, but I'm on the 15-minute chart. And this is what day trading would actually look like. So you'd be on your chart, and if we just read the order flow, so I'm on the 15-minute chart. We've been bearish on crude oil, right? We've been bearish on crude oil, and you can obviously imagine on the 4-hour chart, it would show it a lot more clearer. But for simplicity, we've been bearish on crude oil. And I'm not going to get too much into entries here, but I'm just going to quickly say what I'm thinking. Here, there's a lot of liquidity, right? There's a lot of liquidity here. And if you look at this wick, we've taken out liquidity and we've instantly shot down, which I love. Always love to see that. And if you look a bit more carefully, you see this wick's also hit this order block here. Right, the last up close candle before the down move. This 15-minute order block has been hit and then price quickly goes down. Now I like to see that. I like to see that because we've had our liquidity sweep here. Let me just write this out. Liquidity sweep. I don't know why the text is so massive for. I'm just going to make that smaller. So we've had our liquidity sweep. That's too small. Like that. So we've had our liquidity sweep here. We've touched the order block, the last up close candle before the down move, and we've had huge displacement down. And we've also had a market structure shift, which just means the bodies have closed below an order low. Don't worry too much about that. That's not too important. But because it's the 15-minute chart, it's a lot more reliable than the 1-minute or the 5-minute, right? It's a lot more reliable on the 15-minute chart because intraday, there's only so much manipulation that can happen, right? If price has to move somewhere by the end of the week, it's going to move there regardless. So the 15-minute chart, the order blocks, the fair value gaps, the liquidity sweeps are a lot more reliable and a lot more significant. Now, anyway, what does that mean? I'm a swing trader, but if I was a day trader, this is the sort of setup that I'd be looking for. We've had our liquidity sweep, we've hit an order block, we've gone down a lot, and we've left a fair value gap here, right? We've left a fair value gap here that's been partially unfilled. What I would like to see is, because I know we're bearish, is I'd like to see just a basic continuation. So, and we've already almost got it here, something like that, right? And then continue straight down to this low here. That is what I would like to see as a day trader. And the good thing about day trading is that you can just set your limit order up, right? You can just come on here, create your order, and then I'm just going to put it on for simplicity's sake. You can just put your buy price all the way up here, take profit down there, like that, stop loss at there. I'm not going to actually execute it, but you get the point, right? You can just do that, and you can kind of just set it and forget it, right? You set it and forget it for a few hours. Just let it do its thing. You can, take your time doing the analysis, which is what I would highly recommend. Because for me, I like the majority of my work's all done on the higher time frames and just reading this price action, right? Just seeing what's happening. And if you're a day trader, you like to be, quite slow. You don't want to be under pressure. You don't want to quickly make decisions. You don't have to, where do I enter? Where do I enter? Quick, 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 because price is going to go off without me. If you don't want that sort of hassle, I would recommend day trading because I think it's quite good. Um, there's two caveats with day trading that you have to consider. The first is time. So there's only 3 times that you actually can trade, which is the London session, the New York session, and the Asian session. So you can't just trade at any time of day, right? So, and we're on crude oil here. So this is what I call dead time. This is in the middle of no time here. And you can just see how small the candlesticks are. Right, so you want to trade at key times of day. So you still got to, be at the desk at a certain time. You've got to check up on it quite a lot, right? Because the 15-minute chart, although slow, if it, let's say you just set up your limit order and went away. If price did something like this and went straight down, the moment it takes out this low, or even this low, you probably want to cancel your limit order, right? And the 15-minute chart, in like 2-3 hours, that could easily happen. So you've got to check up on it fairly every so often. But if you're an intraday trader and you really want to, buy and sell, be done on the same day, I would highly, highly recommend the 15-minute chart. Highly recommend this time frame. If I was a day trader, I would be on the 15-minute chart because it's just the easiest and cleanest, and the most successful day traders are all on the 15-minute chart. So to summarize, the 15-minute chart is great for most traders, I would say. Most traders who want to trade the lower time frames, the 4-hour chart I love because it's so clean, it tells you everything you need to. The 15-minute chart is essentially the 4-hour chart of the lower time frames, if that makes any sense, right? It's a very clean price action. It's very significant, right? This liquidity sweep is very significant. Whereas on the 1-minute chart, let's just get the 1-minute chart up, right? I mean, look at that. Look at that. I mean, you could say, oh, that's a liquidity sweep. This is a liquidity sweep, right? We swept this low and then we went up. Yeah, and then there's a fair value gap there. It's just not reliable. It's nowhere near as reliable. But the real price action on the lower time frames occurs on the 15-minute chart. Okay, guys, so for the next style of trading, we've got short-term trading, and I'll be honest, I think this is probably one of the worst styles of trading just because it's kind of like the worst of swing trading and the worst of day trading put together. And what is short-term trading? It's trading on the 1-hour time frame, but you will hold for a few days. So you'll hold for maybe like a day or two. And it's not very good, right? Because you're going to have to do this on Monday, Tuesday, Wednesday, or maybe Thursday, but you can't really do it on a Friday because you don't want to hold over the weekend, right? So it's not the best, and because it's the hourly chart, it's not a higher time frame, so you still need time of day, which is very annoying. You still have to trade between London, New York, and Asia, and you still got to worry about all the news events, all that sort of stuff, right? So you can't really just set and forget it. But if you want to be on the lower time frames, let's say, and you've got a job, or you're studying at university, or whatever you're doing, it can be traded. It can be traded. So I'm just gonna look at this price action. It's not the best, is it? You got lots of gap, lots of small candles, lots of wicks. But just looking at it right away, my eyes see these equal lows here. Right, we know there's lots of liquidity at these lows. So let's just mark this out. So I'm going to assume you're on the 1-hour chart as a short-term trader. What you would be doing really is you would look at this fair value gap here. You'd see all this liquidity here, and you'd be entering at the fair value gap. Stop at the high, and then I would say aim for a 2-to-1. You know what? Because this is what I mean. Because you're a short-term trader, you can get a 2 to 1 on the lower time frames very easily, but you're gonna hold for a lot longer, right? Because each of these candles is an hour, so you're really holding for about almost a day here. And at least with swing trading, you're always getting a 3 to 1. The thing is, it's not the best style of trading because you can essentially get this on the lower time frames, right? A 2 risk to reward ratio very easily. And you're trading this at New York. You could get a better entry on the 15-minute chart. Just my eyes can tell that there's an entry here on the 15-minute chart. Um, like look, if you like the hourly chart, then you like it. But most of the time, you're gonna hold on for a few days. And if you just look at this like choppy price action, you're gonna get caught up in this quite a lot. Um, yeah, so personally, like I wouldn't really recommend it at all because I don't think it's that good of a time frame. And if you just look here, like here's a key high that we took out, but it's kind of like a liquidity sweep if that makes sense. So I'm not really happy with this time frame. You've got this fair value gap here, which got disrespected, even though we are bearish overall, right? Which kind of doesn't make much sense to people. So you see this order block here, right? You see how price has wicked up into it, wicked up into this order block, and then it's instantly gone back down. That tells us that we are bearish. And if we go on the 4 hour very quickly, right, because short-term traders don't use the 4 hour chart, we can tell just from the order flow that we're bearish and that we're going to go for this low. But on the hourly chart, because it's not a higher time frame, there's still that manipulation, right? Because you could have put your stop loss here and you would have been correct with the direction of the market, right? But your stop loss would have got hit and it would have gone down. So you're more likely to get swept, right? More likely to have liquidity sweeps. If you're not a fan of the lower time frames, anything below the 1 hour chart, and you kind of want a hybrid approach, then maybe I would recommend this. It's personally for me, like I would avoid this. I've got the least experience on the hourly chart. I have lots of experience on the lower time frames and on the 4 hour chart, but I've got not much on the hourly chart because I never liked this at all. I never liked this at all because it's got all the cons of day trading and swing trading put together. You've got to hold for a few days, and you're also getting a small risk to reward ratio, and you've got time of day, and you've got news, all this stuff that you got to think about. So honestly, I would not recommend this. I would not recommend anyone to be a short-term trader. Okay, guys, so now we're talking about swing trading, which is my favorite style of trading, and I can talk about this for the next hour, but I'm not going to do it because the videos are already very long. So let me get to the point. So swing trading is on the 4 hour chart, and it can be on the daily chart too, right? But I think the 4 hour chart's the best, just because you get more setups, you don't have to wait as long, and yeah, with swing trading, you can trade at any time. There's no news to worry about. There's no sessions that you have to worry about. It requires 10 to 15 minutes a day. Like here's all the pairs that I watch, right? And I just quickly scan through each and every single one of them. Like I can just scan through all these pairs right away, and I know exactly what I'm looking for. And it takes 15 minutes a day. Like I'm not joking. It takes 15 minutes a day. And one of the biggest draws about swing trading is that it's so clean. It's so much easier to read price action. There's very few liquidity sweeps. There's less messing around because right here on the Australian dollar against the US dollar, this is a real market that real transactions needs to, occur. People in Australia, businesses in Australia who do business with Americans have to convert Australian dollars to American dollars and vice versa. This market has to move in one direction or the other. And on the 5 minute, 1 minute, 15-minute chart, even the hourly, you can mess around quite a lot. A lot of manipulation can happen. But on the 4 hour chart, the price has to move in the direction it wants to move. Yeah? There's a lot less manipulation that can occur. Like it's got to move. And, because you got to think a country, Australia depends on this currency, doesn't it? This is that whole currency depends on this. So there's less messing around, which I like quite a lot. But yeah, so in terms of swing trading, like you can come on the charts right away. I can see a potential setup of mine. I like this gap here, right? So when we've got essentially the bodies haven't closed over each other, we've got this wick, and then we've got this like almost gap here. Price does like to refill this quite a lot, almost like a fair value gap sort of thing, right? The real term for that is a volume imbalance, but you don't need to worry too much about that. And essentially for me, what I would like to see is a retracement up there, and then continue it down on the 4 hour chart. And yeah, I mean, I'm glad I recorded this video because I probably wouldn't have seen that setup actually. So, and in terms of targets, this liquidity here, this 4 hour low, which is very significant by the way, because this right here is a daily low, right? Because we're on the 4 hour chart, every single candlestick, every single low is very important as it has billions, literally billions of dollars worth of liquidity of stop loss orders here and here, right? It's not the 1 minute chart. This is the 4 hour chart. And this is a real serious time frame because when I worked at a bank, everyone's executing on the 4 hour chart. The analysis happens on the weekly and the daily. The 4 hour chart is where they execute. So there's a lot of money here. There's a lot of people with lots of money who are looking at this time frame and are executing purely based on this time frame. And this is what we call smart money. Smart money execute on the 4 hour chart, right? I hate when people say they're smart money traders and then they're on the 1 minute chart. Like, you can use the same logic that smart money do, but the smart money trades on the 4 hour chart. And yeah, so this would be your trading as a swing trader. So I'm gonna remove this just so it's more clearer. So you're on the charts, you've got your liquidity, you've got a clear target. You would enter like this. You'd set up your limit order. You'd have your stop loss at this high here. You'd target this low here for let's say a 3.4 risk to reward ratio. And yeah, you would move on with your life. Like literally, you do whatever you gotta do. Let's say you work, you've got a family at home that you gotta look after. You've got studies. Maybe you've got like another business. Like I've got a different business to run. So for me, it's just easier to set this limit order up, set and forget, move on with my life. Like the price action is clean. I know where it wants to go. Like if you just look at this, it's so obvious it wants to go down, right? It's so obvious we're in a clear downtrend. But on the 1 minute chart and the 5 minute chart and even the 15 minute chart, that isn't reliable because this candle here, you see these little wicks, these little up candles here, that right there is like 2 days worth of bullish price action. So if you're on the 15-minute chart and you zoomed out, all you would see is an uptrend, and you'd think, oh, we're going to go long, we're going to go long, and then you'd lose, right? Same thing here. This little up move here, people on the 1 minute chart. I mean, this looks like it's been going up for years, probably, doesn't it? But on the 4 hour chart, you get to see the bigger picture, right? This is what the banks are trading. Um, yeah, so it's as simple as this, right? Swing trading is for those who want more time freedom. You don't want your whole life to be, oh, I'm a trader, I'm a trader. You want to be, entrepreneur. You want to be, a family man. You want to, travel, do anything, right? You want to be able to be free, time free, right? You want to be financially free, of course, like everyone, but you also want to be time free. And swing trading is the only way in trading that you can actually be time free because if you're a day trader, if you're a scalper, if you're a short-term trader, you got to be there at a certain time of day. If you trade the London session, you got to be there 8 a.m. let's say till 10 a.m. in the UK. That time you've got to be there at that time. Wherever you live in the world, you've got to be up. You know that could be at night for you, but you've got to be there on the charts, almost like a job. Every single day, Monday to Friday, you've got to be there, and you've got to trade that session, whether you like it or not. Whereas with swing trading, literally any time of day, even on the weekend, you can just set up your limit order up, and you don't have to worry about it, and you can check it literally probably like once a week. But I would always check it in the morning just to see what's going on. Because what could happen is you could get something like this, and as soon as price comes below this low, right, this liquidity low here, the setup's no longer valid, right? And then you just cancel your limit order like that. But I would say, personally, after years of trading, years of failing, swing trading is by far the easiest approach. And lots of people do agree with me. Swing trading is the easiest approach to trading. It's so much clearer, it's so clean, and it's so obvious. And you don't have to worry about time or news or any of that. You don't have to worry about the characteristics because this is another thing. Each session, like London session, has its own unique characteristics that it does, right? It tends to have a fake move and then it goes in the real direction, whereas New York's like a continuation. And with swing trading, you don't have to worry about any of that. You just set up your limit order and you move on with your life. And I love this. This is my personal favorite style of trading. And if you've got like a job or you're still studying, what I would say personally is be a swing trader, get comfortable with being a swing trader, become profitable, and as soon as you're profitable, and let's say you quit your job or whatever, you go full time, then you can go into lower time frames because you've got all the experience of the higher time frames to help you. Right? I would not if you're not a profitable trader, please do not just start on the 5 minute, 1 minute, or even the 15 minute chart because you're going to struggle a lot. Right? The 4 hour chart is nice and easy, and you can have as many pairs as you want. As many pairs as you want. Because if you're a day trader, most people would say just trade the Australian dollar. And you would trade it, and there will be times where the market will just consolidate and you won't have any setups for a few weeks, really. Or you would have a few losers that you could have easily avoided. So with a swing trader, you can trade all markets, forex, indices, commodities, stocks, crypto even. I mean, I don't trade crypto, but I've seen my setup works. Um, yeah, so swing trading is the way. All the most successful traders in this industry, the large funds managers who are managing millions, they all are swing traders. They're not day traders. They started off as day traders, but they all graduated to swing traders. And your progression as a trader often starts off. I started on the lower time frames, then I went onto the medium, like the 15-minute time frame. Then I went onto the 4 hour and the higher time frames, and then I found true success. Yeah, that's just my opinion of trading. That is what I would say. I'd recommend everyone who's not profitable should be a swing trader. Get used to it, get used to the higher time frames, get used to reading price action. But yeah, I hope that clarified everything for you. Scalping is for quick, in and out, fast decision making. You only want to be holding for a few minutes. That's what scalping's for. Day trading is more for like semi long term analysis. So you want to set up a limit order. You do want to take your time, but you don't want to hold for like the a few days, right? That's what a day trader sort of does. Short-term trading is kind of like the worst of both, where like you hold for like a few days, but you still got to be there at a set time. You got to worry about news. You got to do all that sort of stuff. Whereas swing trading, you can trade at any time. You've got the higher time frame bias with you. Um, yeah, you trade like the banks do, and for me, I think that's the easiest approach. I hope that simplified it for you. And in future videos, I'm going to cover each different style of trading and like different models that you can use and stuff. But yeah, that's everything for this video. If you did like it, please like, subscribe, leave a comment for the algorithm, and I'll see you next time. Peace.